If you're looking for an investment, you know the difference between the ATM business and real estate, send in a video and I'll explain the differences and where you should put your money. All right, so I've been in the ATM business for over 24 years. I also looked at other investment opportunities, stocks, real estate, took courses on both of them to try to educate myself to make the best educated decisions. One of the things that I found out is rate of return on the stock market and real estate. Now, a good rate of return on a stock market is anywhere from 8 to 10%. They are saying to double your money, they call the rule of 72, is to double your money every 7 years. You have a rate of return for almost a little over 10%. So what you're trying to do in the stock market is double your money every 7 years. To do that, you have to have an average rate of return, let's call it 11%. Similarly, in real estate, we have to do the same thing. We have to have an average rate of 11%. So they always try to get somewhere, the magic number is between 8 and 20%. So what I want to do is give you a video that talked about real estate so you can make a decision or you'll have a better understanding of how the ATM business resonates or relates to real estate. Point number 1, capital requirements. For real estate, when I was looking at real estate, and it depends on if you're going to do a fix and flip or you're buying and investing, you're doing apartment buildings, you're doing commercial, there's all kinds of different things. What I saw, of course, we're in Illinois, things are a lot more expensive than other parts of the country, but when you're looking is you needed basically $300,000 to really be a serious investor into a project or a building. Now, this is what you needed to make a successful project. In ATM business, you can do it for, we talk about it all the time, really a small investment, somewhere about $6,000. But let's just say you bought a portfolio. You're looking at about $100,000 for a portfolio acquisition to try to compare apples to oranges. So $100,000 versus $300,000. Now, what's the rate of return? On a $100,000 project, you're looking at anywhere from 40 to as much as 100% rate of return. That means you spend $100,000, you should be seeing at a minimum $40,000 of cash flow coming into your business. On real estate, you spend $300,000, you're going to finance most of that with the bank, and you're looking at a rate of return in a successful project anywhere from 8% to as much as 20%. That's a home run in real estate is 8 to 20%. In the ATM business, you're looking at 40 to 100%. Point number 2, time management. How long is it going to take or how much time do I have to put into each project? All right, we allocate here 1 hour a month or 30 minutes every 2 weeks for the ATM business. So however many ATMs you have is how many minutes you're going to have to spend or hours you're going to spend on the ATM business. Again, if you're buying an existing portfolio, you're just going to manage it. If you're looking to grow a portfolio, you're going to take a little more time because you're out there farming, you're planting seeds, you're watering those seeds to try to grow your ATM business. So it just depends on where you're at. Are you growing a business or are you buying and trying to maintain that business or are you starting from scratch? Each one is going to have different time management. However, we allocated 1 hour per month per ATM. I think that's very sufficient to grow and not only maintain your portfolio, but grow your portfolio. In real estate, it depends if you're buying an apartment building, how many tenants are in the building, what's the age, are you buying it for the bare minimum, you're going to gut the project or gut the building and then build it up brand new, and then how many tenants, how many flats, how many apartments are going to be there, and then if it's older, there's going to be more maintenance, there's going to be more time management, but if it's newer, there's going to be less. So you got to weigh both of those out in your investment opportunities. Point number 3, tax benefits. So if you buy an apartment building, one of the things you can do is you can depreciate that building. It's going to be commercial real estate. It's going to 27-year depreciation is one of the things that you can depreciate. That'll be income for you. The other thing is you can write off any interest that you pay for the building. So those are some of the deductions. Of course, there is stoves and refrigerators and assets that you're going to put into the building. You can write all that off. Now, when you're in the ATM business, you can take off what they call your Section 179. That'll give you accelerated depreciation. Most of the time, not every year, but most of the years, you will be able to depreciate all your ATMs pretty much in the first year. We don't do that as a company. We put it on a 7-year depreciation schedule, but a lot of times if you choose, you could accelerate your whole ATM on the first year. We just don't do that. We we just put it on a 7-year. We don't take that accelerated depreciation as a company because we're always buying new ATMs. But once you get into business, you can, most of the time you'll have the option of you can depreciate it 100% that first year. So those expenses that you can depreciate, also you have opportunity to write off all your expenses, your car insurance, your gas, cell phone. These are always deductions that you can take. I don't claim to be an accountant. I'm just giving you some of the things that our accountant has suggested over the course of the year. Number 4, risks and trends. All right, so when you're dealing with what is the trend, a lot of people are saying, hey, cash is going away. I'm worried about getting into a cash intensive business when cash is going away. We've been talking about this for over 25 years. Cash isn't going away. Cash is still there, but it could be a concern for somebody getting in the ATM business. In real estate, we have market reactions. Which way is the market going? Right now, in the last, I think that's 4 or 5 years, price of real estate keeps going up and up and up. So that might be a good thing if you're owning real estate, but if you're trying to get into the game, this is a challenge, is where do I find a real estate? Am I paying too much? And we're worried about a crash. Also, interest rates for real estate business interest rates, as you know, right now currently are through the roof. Before they were closer to 3%. Now they're as much as 7.5%, 8%. Now, one thing, if you're a commercial investor in real estate, you have to refinance your building every 5 years, which means that you can't, if you go to buy a house, you can lock in an interest rate, you can be in it for 30 years. With a commercial property, you have to refinance every 5 years because the banks don't want to get stuck with properties. So that means that if interest rates go up, which they are now, you could have to change your whole game plan. You might have originally got in at 3%. Now you're looking at 7, 8, 9%. Guess what? You have tenants. You might not make as much, or you might not make anything. So this is always a concern. Where's the real estate interest rate and what's the current environment? And number 5 is scalability. On the ATM business, it's very easy to scale. You get one, you go look for a location, you can put another one, you can scale it. It's not a big cost investment. So it is easy to scale. And the ATM business provides steady cash flow. Guess what? You don't have to worry about anybody paying you. You get your money automatically. They take money out, they pay you instantaneously. You get your money the next business day. On real estate, one of the things you have to do is once you get to a certain level of properties, you'll have to hire a property manager. It's just too difficult to do it all by yourself. Maybe you could do it 1 or 2 or even 3 properties. You get more properties, you're going to need a property management. They take usually 10 to 12% to manage your property. But one of the nice things in real estate, which we don't really have in the ATM business, is you always can work with a realtor to help you find new properties. There's the MLS guide, there's all kinds of websites that will help you find new properties and give you a lot to choose from. This is a nice benefit of being in real estate. In the ATM business, for the most part, you will have to find your own location. This is one of the challenging parts of the ATM business. Now, we have locators, we pay locators, we also create locators. This is a way to help with some of those challenges, but it's not as easy as it is in real estate when you have a seasoned veteran realtor who can always point you in the right directions for future properties. So if you're thinking about starting your own profitable ATM business, I want to invite you to our free checklist entitled ATM Business Passive Income Checklist. The 5 things you need to know to start your profitable ATM business so you can start making money, spend more time with your family, and have passive income. If this is interesting to you, click the link down below and start your ATM journey today. Again, this is Phil from the ATM Mastermind Group page, where we buy your freedom back 1 transaction at a time.